Hello everyone, welcome back to the Road to the Millionaire Retirement. My name is Andrew and I want to thank you for checking out this channel and this video where I will go over what I look for in a company for me to decide whether I want to purchase the stock for that company or not. I'm not gonna go over in the list of number one, two, three. I'm gonna go over them based on what's available from the top up here and then go down as I move on. So we're gonna use the Microsoft as an example. The first thing we'll see here is the market cap. Usually I like to avoid market cap that's below 1 billion just because I feel more secure about the company itself if they're on a higher end. With that said, it doesn't necessarily mean I will completely avoid any company that's below 1 billion. It could be something that has a good potential or a company that's not just worth big that could still grow. So if you find a company that's, 750 million and you know the company and you know that it has a potential to grow, then that's something that you consider should consider. I mean, just don't ignore it because it's less than, a billion market cap. So the market cap is something that I look into. Oh, by the way, market cap is basically the price. No, not price. The market cap is the value of the company in itself. So Microsoft is 1,757,000,000,000. So that's the value of the Microsoft as of right now. All right, so going down the graph. So usually when I come here, I like to see their 5-year growth and their 10-year growth. I like to usually invest in a company that has a growth just because, I mean, you want the company to grow so that way their price goes up, meaning that your stock price goes up, which result into, bigger money in your investment. So I wouldn't necessarily avoid a company that kind of has a flat line or plateau. So that mean like the company hasn't really grow in their price for year or 5 year. But if their share hasn't grown and is stuck on a plateau, then usually they will have to make it up by the dividends. The perfect example is AT&T. So if you look at AT&T and we'll go 5 years. So as you can see for AT&T, they don't really have a growth. And even going back 10 years, they're kind of like stuck on, I want to say maybe like 36 average. But what they make up for is the dividend. If we look at their dividend, it has been going up non-stop every single year. Small amount, just 1 penny, but it has been going up non-stop without ever stopping or decreasing or freezing. Or I mean, like what I meant by freezing is that the price of the dividend hasn't gone up. It's just stuck with where they are. The AT&T is known for having a paying dividend for a really long time. So like I said, if the graph is plateau like here, maybe let's go to 5 year. So if the graph is like plateau, then what I would look for is dividends and make sure that they have a really great record of dividends because you're not making money from the company growth, you're making money from their dividends. So if it's not the growth, then the dividends. All right, so going back to Microsoft, coming down here. Okay, so the dividend in itself, I wouldn't so if you find a company that doesn't have dividend, at least still look into it if the company has potential to grow and make money. I'm gonna give you an example. AMD. AMD has no dividend, but it has a good record of growing since 5 years ago. And I know the AMD in itself, like AMD make processor for CPU, computer, AMD make graphic card, and they have been really pushing their technology for higher performance computers. So I know that AMD has a bright future ahead of them because their only competitive or competition is Intel, which only make processor, and Nvidia, which only make graphic card. Correct me if I'm wrong, but as far as my knowledge goes, AMD has doesn't really have much competitor, and AMD make what Intel and Nvidia both do not make. They make both processor and a graphic card. So I have really good faith in AMD, and I have faith that they're gonna continue to grow. Even though I don't get paid in dividends, I get good returns on their company growth. So going back to Microsoft, dividends, if you really want it, it's your choice, but you have to be also careful that high paying dividends could be a risky company that try to attract the investor with high dividends. So just be careful and don't be tricked into just high paying dividends, because dividend isn't everything. Alright, coming down here, company profiles. I want to make sure that my portfolio is not all the same. Like, I don't want to invest all in technologies, and when the technology hit, like, all my stock crashes because they're all technology. So I come here to make sure that I try to avoid the same sector or same industry, so I could diverse my portfolio as best as I can, so that way they're kind of protected from each other. So this is something that I look for into. Earning per share. I believe. Okay, correct me if I'm wrong, and you might want to do more research. But earning per share is basically how much the stock market expect. Well, at least based on this graph. Based on this graph here, it shows you, like, how much the stock market expect the Microsoft to do quarterly and what they actually do. So that's, look, if we look at here, the expectation was 134. The estimate EPS is 134, and they did $1.46. So they beat the estimation by 12 cents. This isn't really a decision maker for me. So I look at it. I'm like, okay, so the company did better than expected, which is good news. But sometimes they'll do negative, but because it's negative, I wouldn't just completely ignore it, ignore the company. So earning graphic here is something I look into, but it's not a decision breaker for me. Alright, coming down here, we had two different graphs, one on the left and one on the right. Fundamental analysis. This usually kind of tell you, like, how, I guess, where the company's standing is, their valuation, quality, growth, stability, financial health. I don't look at this graph to make my decision. I do look at them and see where the company is at, but this isn't a decision breaker for me. But it's something that I do look, because I don't want something that's completely overvalued and low quality and has no chance of growth and financially risky. Like, I wouldn't really invest that, but it does give me an idea, like, hey, you know maybe if the graph on here is all on the left side, on the danger zone, I guess, then I would look deeper into the company before I decide to buy it. This graph here in the center, I usually don't, I look at it and I don't necessarily have this graph determine my decision. Same thing as the fundamental analyst. It's just something that I look at and see where the company is. Okay, so the last thing that I look at is under the key statistic. Like that. And I'm not gonna go into too much detail, because a lot of these are not something that I know 100%. And I don't want to, like, say, this is this, but turned out it's completely wrong, and I don't want to, like, misguide you guys. And the purpose of this video is, like, what I see and what I think is good for me to purchase it. So we're just gonna go over, like, something that the things that I look at, and you guys could decide whether, hey, that's a pretty good call, or hey, you're a terrible investor. I don't know how you did what you did. Alright, so starting from the valuation, market cap over 1 billion. Yes, as I stated before in the beginning of the video, market cap, over 1 billion is preferable. Profit and earning, I don't quite know 100% what this is. Maybe I should know as an investor, because that's pretty important, and that's a number that a lot of people seem to look at. But for me, I guess I just I'm just being so ignorant. Let's see, going down. Alright, so I think that's pretty much it from the valuation, market cap. Growth. Alright, so the growth, I look at, the earning per share growth, see how they did compared to last year and last quarter, making sure that they're always on plus and not negative, meaning that the company is growing. Let's see, revenue, make sure that the revenue is also growing. Free cash flow, profit margin. So these profit margin, gross margin, check these out. Operation margin and the pre-tax. No, actually no. I only look at the gross margin and the profit margin and operation margin. They're all positive. That's good. Now the returns, I usually look at all of them: the return on equity, return on asset, and return on investment. I mean, if their investment or if their return on all of these are plus, that means they're making good money, right? So this all six is something that I look at. The debt, there's long-term debt. They could be over 100%. Maybe they're in the debt because they bought another company for big bucks, so maybe they're in the debt. So I wouldn't say the 100% or over 100% debt is a deal breaker, but I do want to know like how much debt the company is in. So check out the debt. The total debt asset, yes. The total debt for the capital, yes. Okay. So the last thing that I look at here in the debt is payout ratio. The payout ratio is very important because any company that pays dividends, the payout ratio determine how much of the company's income or revenue is used to pay the dividend. So 33%, so the Microsoft is spending 1/3 of their money in dividends. So any company that has over like close to 100%, they're running. There's a chance that the company might need to stop paying the dividend because they can't afford to pay dividend. And if the companies are over 100%, then I don't know for sure, but there might be. And don't quote me on this, but from my understanding, any payout ratio that's over 100%, the company might be using like borrowing a debt to pay for the dividends. So like it's very unstable for the company to paying dividend. And I'll go over in detail about that in a dividend video. So maybe stick around for that. Operation metrics. I usually don't look at this at all because I don't know how to look at this and have this affect my decision making on my final purchase. So that's pretty much it for this video, I guess. Hopefully it kind of give you guys an idea what I look at when I buy or not buy, but yeah, I guess when I purchase the company's stocks. So thank you for watching. If you guys have any question, comment below and I'll try to answer them on the next video. Alright.